Alrighty, folks, the stock market is not getting better. In fact, it's getting worse. We have a lot to go over in this video. We're going to break down the indexes, stocks that I'm looking at, earnings, charts, all that good stuff. So sit back, relax, hit that like button, and make sure to subscribe, of course. It's free. And you might as well follow me on X at Stas Talk Stocks. That's linked down below. I'm getting way more active on there, guys. And with that being said, well, let's dive right into the video. So like I said, things are not getting better for the indexes here. They're getting worse. It's currently about, well, it's 9:25 where I'm at right now in Italy, but when I'm making this video in US time, at least on the East Coast, it's about 3:25 p.m. and we have about 30 minutes left in the in the markets, or for the markets before close, and all the indexes are heavily in the red. SPY's down 1%, down about $4. We have the Russell down the same, about 1%. The Nasdaq's down 1.3%, and we have the Dow Jones down not as much, but still down 0.75%. And clearly, guys, by the looks of it here on the 4-hour chart on SPY, we're about to take out, or at least test the lows from a couple of weeks ago, being from the beginning of this month of October. I'm not sure if you all remember, but early in October, we hit about, 420 roughly on SPY. Then we had a bit of a rally from, 420 up to about 438. Pretty nice rally, actually, about 15, 20 bucks there. And pretty much, guys, that got erased over the past couple of days like that. Now we're pretty much right back to 420. And if we do take that point out, in my opinion, based on this chart, we could be going low 400s, right? 405, 408. That's a clear range here. Let me draw some lines out to show you guys. 405 held back in the middle end of April. We double bottomed there. Then we actually rallied a good chunk off that point. But that'd be a target, no doubt. 405, let's see, 408 was a clear support in the beginning of May. So, a couple weeks after we double bottomed. And of course, after that, we ran all the way to 460, but 460 is not relevant right now since we're way under that point. So I'm telling you guys, if we do fall under 420, in my opinion, let me set my alert there now. Mark is at or below. There could be more red to come. No doubt about it. Let me actually put that there. Mark is at or below 420. So keep your eyes on that. And today's obviously Friday. Well, is it Friday? Wait, I'm losing track of the freaking days, guys. Yes, it's Friday. That's clearly, you clearly know I'm on vacation. I'm losing track of the days. So it's Friday. We're probably not going to fall under this point today. Obviously not tomorrow because it's the weekend. But next week, man, this is going to be a spot worth watching for sure. 420. And again, if that breaks 408, 405, that's where we could be going. And triple Q, let me pull this up and show you guys. It's looking very similar, right? Down 1.3%. We saw a nice rally a couple of weeks ago. It was a fake out rally now with the benefit of hindsight. And now we're pretty much right back to that multi-month support level, which is at about 350 to about 355. You guys can see back in the middle of August, we held that. Also, end of September, right? Early October of this month. And now we're pretty much getting right back to it. If we break under 355 on triple Q, 350, let's say in general, that's the general range here. There's going to be some more downside, in my opinion. We could fill the gap down to 338, 340. We've talked about this before on the channel. And again, the bears are gaining an edge each freaking day. It seems like that goes by. And the VIX is currently down 1.3%. I'm not sure how that's possible, but the VIX is down after, it looks like yesterday it had a pretty big move. Excuse me, guys. Yeah, it looks like yesterday the VIX went from 1875 to about 2175. So it ran a good, that's got to be 10%, 15%. Yeah, 15% yesterday. So now the VIX is kind of consolidating, if you will, at about 21. And do not be surprised, guys, if the VIX goes mid-20s. I would not be surprised at all. In fact, that's kind of how it's setting up by the looks of it. And I said this a couple of days ago. Did I not? I'm not making much content these days here, but I did say this, I think 3 days ago, whatever day it was. Mid-20s, we could be going there, which would be a multi-month high for the VIX. Not good, guys, not good. Well, I guess it is good if you want to buy and hold for the long term, which I advocate everybody do that. You could trade if you want as well. I trade. It's fun. It's great. It's awesome. But, of course, long-term investing, if you want to secure your long-term future, times like these where stocks are going down, there's volatility, there's fear, right? These are the best times to buy if you're looking at least 10, 15, 20, even 5 years out. Sure, if you're looking a month out, who knows what the heck's going to happen, right? But if you're looking out years, these are the times to buy if you have long-term, a long-term outlook and you have patience. So, yeah, man, that's a quick little breakdown on what's going on here with the indexes. Nothing crazy. The Russell's got to be, taking the lows out. Yep, the Russell's actually taking the lows out, guys. Unreal. We talked about 1,700 a couple of videos ago. That was a multi-month support. Now we just hit 1685. Unbelievable. We're starting to dump down on this 4-hour chart quite aggressively. And on the 1-year chart, you guys can see we're at a low as well. And the Dow Jones, let me pull this up and see. Dow is looking pretty ugly as well, guys. Not a surprise. Looks like we have a head and shoulders forming. It looks like we're about to go to 32.6, which was the low from earlier this month, also from a couple of months ago. So if we do break 32.6, guys, on the Dow to the downside, 31.5, 32, that's where this could be going. 31.5 to put it on your radar, guys. That was the low from the middle of March. So yeah, it's getting there, guys. It's getting there. A lot of the gains from this year are slowly being erased. They're evaporating, right? Just like that. A lot of the gains, especially for the Russell, are gone. I mean, all the gains, it looks like, for the Russell for the year are now gone, which is pretty wild if you ask me. So let me run through some charts here very quickly. Of course, you guys know Tesla reported earnings, I think 2 days ago. I forgot to cover it. Well, I didn't forget. I'm on vacation again, guys. I'm not making a bunch of videos these days. But Tesla's completely in free fall mode, guys, which is not good. Of course, Elon said, I'm not sure if you caught it, but Elon said, I think production the Cybertruck won't be cash flow positive for at least 12 to 18 months after production. They missed EPS. They missed on revenue. Looks like they're not scaling back on the Mexico, not scaling back on the Mexico factory, but I was reading an article that was like, they're not going to go full tilt on the Mexico factory for a little bit here. I forget exactly why. And Elon was talking about how high interest rates are pushing up people's car payments, which is going to be a challenge, for people to go and buy their cars, to go and buy a Tesla with higher interest rates. And it looks like they're going up even more, right? The monthly payments more, which deters people to deters them from buying the vehicles, right? Which is a problem. And he said, I believe he wants to lower the prices even more in different markets to kind of combat that. So clearly, Tesla investors did not like that. And the stock today is down 3%, dumped down 10% the day after earnings. So Tesla's in free fall mode. And on the flip side, guys, Netflix, baby, holy moly, Netflix went up like crazy yesterday. I think 16% the day after earnings. And that's because, well, they did very well on EPS. I believe they beat. Revenue came in line. From what I remember, they crushed it on total memberships, and they raised their prices, I believe, on the premium plan from $19.99 to what, $22.99? I think the basic plan from $9.99 to $11.99, something like that. I think the ad-supported plan stayed at $6.99, if I remember correctly. But clearly they have pricing power, right? You and me, we're still going to be paying that Netflix subscription, whether it's $9.99, $11.99. Now, sure, if it goes to $100.99 or whatever, yeah, a lot of people are going to cancel, but they're not stupid, right? They're not going to do that. They slowly inch it up over time, and I believe they increased the prices by 15%. So you got to realize, guys, the inflation out there, businesses pass it on to the consumers, right? Or they will just go out of business, right? Imagine if a business didn't raise their prices over time, they'd go out of business because they have to keep up with inflation, because at the end of the day, they have expenses, right? They got to pay their employees, and those costs go up over time. So they have to raise prices. It makes sense. So Netflix clearly is doing well right now. No doubt about it. And not many people are going to cancel, guys. Maybe I'm wrong. Who knows? Maybe I'll eat my words. I have no idea. But Netflix is crushing it. Tesla, not so much. And it looks like here, let's see some other names very quickly before I wrap up the video here, guys. Some other names that are not doing so well right now. Enphase, man. Enphase is getting freaking clobbered, guys. I'm not sure. Well, I guess it's probably because of Tesla. Makes sense. Maybe maybe not. Collateral damage here, right? Maybe not. Maybe I'm missing something. Either way, this thing is getting destroyed right now, and it looks like here Citigroup maintains buy on Enphase, lowers price target to 167. Citigroup trims price target, keeps a buy rating. Let's see who else here. JP Morgan maintains overweight rating, lowers price target to 155. So if these firms are right, I'm not telling you to do this. I'm not doing this now, but this could be a buy. I mean, this could be a buy if you have a longer term, time look, but of course, or time horizon. But of course, we don't just buy based on analysts, obviously, guys, but it's crazy what's going on with the stock. I'm not sure if you remember Enphase in 2022 when we saw the bear market. Enphase crushed it, guys. I'm not sure if you remember, but early 2022, Enphase was at 125 per share. Then it got all the way to 340 by the end of the year. And no joke, by the end of the year or the beginning of this year, guys, Enphase has dropped like a brick ever since that point, and now it's at what, $98? So it's down from $350 to $98. I mean, geez Louise, 71%. And not telling you to do this, but in times of weakness in general, this could be an opportunity, right? And this is a stock that I've said before that I'm looking at as a, growth play, more risky, speculative, if you will. And they have earnings coming up, which is what I'm really waiting for. We'll see how those earnings come out, what they look like, guidance, all that good stuff. I think they're next week or maybe the week after. Yeah, week after. Either way, we'll see how the earnings come out. Or actually, no, it is next week on the 26th. And if they do, maybe not the best, the stock drops like a brick again, that could be a spot where I start nibbling. We shall see, guys. We shall see. But with that being said, guys, that's it for the video. If you enjoyed it, smash that like button. Make sure to subscribe and follow me on Twitter or X at Stocks Talk Stocks. And do not forget to get your free money for Moomoo up to 16 stocks. I think today's the last day, actually. It runs out tomorrow on the 21st. So use that link down below and you can get up to 16 stocks, each up to $2,000. Check out all the details. Again, link down below. And with that being said, guys, cheers. I'll catch you all in the next video.